Hi all, welcome to my channel Satish Vlogs. This video is all about phases of accounting cycle. Primarily there are 5 phases which are being covered as part of the accounting cycle, and those are business transactions, journalizing, ledger accounts, trial balance, and the financial statements. Let me explain each and every phase with an example. I would be considering the example of purchasing a refrigerator. This purchasing a refrigerator is a business transaction. Hope this is clear. Let me move to the next phase, which is journalizing phase. This journalizing phase primarily works based on the concept of double entry system of accounting. What does it mean? How this double entry system of accounting works? Double entry system of accounting means for every debit, there will be an equivalent and opposite credit for the same amount. What does it mean? Let me explain you with an example which I have taken in my first phase, which is purchasing of a refrigerator. When the organization has bought the refrigerator, organization would be receiving the benefit in terms of an asset which is a refrigerator, right? However, organization doesn't get that refrigerator at a free of cost. Organization is supposed to pay some consideration to the vendor in order to receive that refrigerator, right? Yeah. So which means organization would be receiving that benefit or an asset which is a refrigerator in exchange with the consideration or money, right? So here there will be a debit entry would be there, which is a refrigerator, and there would be a credit entry would be there, which is a cash or consideration, right? Hope this is clear. Now let's move to the third phase, which is a ledger postings phase. Let me add some more spice to my previous example. Let's take organization has bought 5 refrigerators for their 5 branch locations. Okay. Now purchasing of 5 refrigerators are the business transactions as part of the first phase. Now for all those 5 refrigerators, the journal entries would be created following double entry system of accounting in the second phase, which is journalizing phase. Now tell me, just by looking at the journal entries which are being created, would it be possible to highlight the total amount spent on the refrigerators? No, right? That would be very tough. It will not be possible to highlight at a quick turnaround basis. However, that can be done if we make a summary of the amounts which are being spent on all the refrigerators, and if we make a sum of the amount, then we'll get to know the total amount of the amount which has been spent on the refrigerator, right? Yeah. In the same way, in the ledger postings, what we would be doing is we would create the refrigerator account and the cash account for which the journal entries which are being made as part of the journalizing phase. Okay. And whatever the journal entries which are being posted, for all those journal entries, a ledger accounts would be created and the entries would be posted respectively in the respective ledger accounts accordingly. Okay. With that, that would be very easy in terms of highlighting the total amount spent on like transaction just by looking at the glance. Hope this is clear. Now let's move to the next phase of the accounting cycle, which is trial balance. This trial balance is the summary of the ledger accounts, which means whatever the ledger accounts which are being created in the third phase, the balances of all those ledger accounts would be shown in the trial balance. Thereby, the total balances or the total debit balances should match up with the balances which are shown in the credit side. The people might have get query why it should get match up. It should get match up because as we have been following double entry system of accounting, for every debit there will be an equivalent and opposite credit for the same amount. Considering this concept, the balances would matches up. Okay, there shouldn't be any discrepancies in the balances, the total balances. Hope this is clear. Now let's move to the last phase of the accounting cycle, which is a financial statements phase. This phase is like a heart to an organization. Okay, this financial statements primarily comprises of income statement and the balance sheet. Income statement provides you the profit earned during the period or the loss incurred during the period from the activity which has been undertaken during that period. And the balance sheet provides the value of the assets as on the particular point of time and the value of the liabilities as on the particular point in time. Okay, so whatever the values, the total values which are shown under the assets side, the sum of the total values which are shown on the assets side should match up with the sum of the total values which is shown under the liabilities side. There shouldn't be any discrepancy because the same concept, because as we have been following double entry system of accounting, there shouldn't be any discrepancy. Hope this is clear. Now, why we have been calling this entire accounting process as a cycle? Because it keeps on rotates and rotates. It is like a loop. From the financial statements, we normally analyze the numbers considering the concepts like forecasting and budgeting, and eventually the business transactions would get driven. So for that reason, we normally call it as a accounting cycle. Hope this is clear. Okay, I would like to highlight few points in this slide, like I would be giving the number of the video and the reference video numbers also. If for any video the reference numbers are being provided, then I would request the viewers to go through those videos before getting into the current video, because the reference videos are like a prerequisites for the current videos. Hope you guys like my video. Request you to share this video to your friends if you guys really like it, and also subscribe for more videos. Thank you so much. Thanks.